Well, there's panic in the market today as Bitcoin drops about $3,000. So I'm coming to you with this emergency video. We're going to talk about the Bitcoin price action as well as the Ethereum. But before I get into it, what I'm going to need you to do is smash that like button nice and early, because I'm coming to you at a time that I don't usually post on this channel, and that is going to completely throw out my YouTube algorithm. And so if you guys can do me a solid, a like and a subscribe if you're not already subscribed is going to make sure it doesn't ruin my channel. So before we get into the price action, everybody's probably wondering why Bitcoin dropped so much, because it kind of came out of the blue. At the end of the day, when price drops suddenly or even pumps suddenly and we cannot back it up with a news event, it's usually just a leverage wipeout. And last week, we did have a lot of long positions opened when Bitcoin broke out of its daily time frame ascending triangle. It turned a lot of people overly bullish. And when that happens, that is what builds up an extreme amount of leverage, which is what has happened in this case. So let's take a look at the charts, and we're going to go through the liquidation data as well. Okay, so looking at the daily time frame for Bitcoin, this here was the ascending triangle that broke out last week. And so a lot of people were awaiting a retest. A successful retest would have had to have held between about 60,700 to about 62K. And we can see that this morning we have dropped below that. And this is what is kind of freaking the market out. What I believe is happening here is we're building a bit of a bear flag formation. And we can see when we have a look at our last high time frame drops in this whole accumulation range, there were those sorts of flag formations built a number of times. So we had the initial drop through here in April, built a bit of a flag, and then had our second drop, which created a lower low. The same thing when we started to drop through June. We started to build a little bit of a flag wedge formation, and then we dropped through and created a lower low. So we're kind of in the same place right now. And this daily candle here that just closed, it actually did close below the daily time frame 200 EMA, which is not great. So what I would be looking out for now, if I'm to expect something like this to repeat, where we actually will break the flag and create a lower low, I would now be waiting for a lower high within the flag that may retest this halfway mark, so around 61K potentially, or even these EMAs, being the 50 would probably be the one to watch mostly. And if there is weakness, if price has a little bit of a retracement and is weak around there, then I would expect that it is coming down. Now, as far as the potential for it to create a lower low, that's where we need to look at the liquidation levels, because if they're not there, then there's no reason to drop it further. It could be that this drops and just comes back to the previous candle close lows around 54K, or it could be that it drops through to the lower levels that we've been talking about on this channel for a very long time. That lower level is between about 46.5 to 49.5. So if we go to high block capital, let's have a look at these liquidation levels. Now, I'm using the liquidation level chart today because this is going to show me the most recent leverage. And you can see here, this is the drop that we just had. And so when we look left, you can see that there was a massive buildup of long liquidation. So all of this were people who longed here probably prior to the weekend. And this was all their liquidation levels from those long positions. So that's basically all been wiped out. And we do have some people who have basically bought the dip. So we do have new long leverage that is built up below the current price. So this right here is the current price. And you can see that there is new here. So these are the people who like to buy falling knives without confirmation of a trend change. Good luck to you if that's your strategy. But at the same time, because we dropped through and it's a fast move that's designed to induce FOMO in people, so there have been a lot of people that have opened shorts as well. And all of this blue area here that you see above price is newly opened short leverage. So just like this drop through here came to take our open positions below price, we are building the opposite way. So there will eventually be a bounce, because they will eventually come for this. As long as we know it's there, our job as traders is to look to the price action to then decide when it's time to get into a long position in anticipation of them coming for this next. Is that time right now? Not necessarily, because this here, when leverage builds up like this so fast, it sends a signal to the market maker that you're not scared enough. So when we go down to lower time frames, I'll be able to assess that a little bit better. But for now, we just need to know what is currently below price and what's currently above price. You can see here how this whole section here is green. That is showing us the delta of longs versus shorts. So when it's green and it's high like this, it's telling us there are many more long positions in the market than there are shorts. And therefore, that's why we get that wipe out. So usually when the funding rates extend or there's just too much leverage, we'll see a fast move the other way, especially when it's absent of any news or logical reason for it to happen. And now we're starting to build it the other way. So we've got a little bit of red here, meaning people are starting to turn bearish. If you're looking at social media right now, a lot of people are calling for lower prices, saying we've broken a key level. It's very scary. You know, all of the fear-mongering kind of posts on Twitter start to come out. And so that's normal that people would be turning bearish on one fast move to the downside. So when we look at this, we know that we're kind of in a very tricky situation right now because it doesn't always have to be a retracement before a further drop. So that's another thing we have to be aware of. We could just straight drop out of the flag from now, or we could have a bit of a retracement then drop, or even another option that could happen when you're looking at the daily time frame is we come up for another touch before we drop down. So lower time frames are going to help us to decide which one is more likely, but this is what we need to be aware of when we look at the higher time frame. So let's analyze the price action on the 1 hour time frame. If you've been watching this channel for a while, then you will know that we trade a method that involves 3 level rises, a midweek reversal, 3 level drop, or vice versa. It can happen the other way. And usually that will all happen within a 1 week time frame. Sometimes it can be dragged out over 2 weeks. And so when we have a look at last week, which is this area here, into this week so far, just at a glance looking at it, you can see that mostly for last week, the whole week was up. Therefore, you would expect the whole week this week to be down. It's not always that simple, but there are other key factors that will hint to you that that is what is going to happen. And that is usually what price does at the key levels. So this area here that I have marked at about $65,000 is called the high of the week. So it's the highest point the price went last week in this range here, between Sunday 5 p.m. New York to Sunday 5 p.m. New York. And that was these candles right here. And we can see through the weekend, low volume consolidation, nothing exciting, not worth trading. The week opened with its false move as it usually does, and it tried to repeat that high of the week and close bearish. So a second rejection of the high of the week is a pretty good indicator that we're going to trend down, and that is what happened. And just like price is attracted to the high of the week, it's also attracted to the low of the week. So the low of the week is at 57,750, and that's where we pretty much opened last week. And what we can see now is we've almost had basically 100% reset, where the wick that just happened this morning has pretty much returned to that low of the week. And that's why we now need to be very cautious and watch the price action on smaller timeframes to get a hint of what might happen next, because once price retests one of those levels, the next job is then to break one of those levels. And in breaking it, it creates a new high of the week or a new low of the week. So what we've seen so far this week is that we didn't break the high of the week when we had that attempt, and we've come down and we've retested the low. So what we need to be watching for now is, will we have some sort of a retracement to build up a few more contracts, build up those long positions of people who are not scared enough yet, and then come down to eventually break the low of the week. So what you're going to be looking for is key levels in a retracement where price starts to look weak. That's what's going to give you a hint that price will head further down this week from where it is now. And one thing you can do is just draw a simple fib levels, and often the fib levels will line up with other key areas that are really important. So just like I explained the low of the week and the high of the week, there's also low of the day and high of the day, which is in relation to the day prior, and then there's initial high and low of the day. Now, if you want to know what the initial high and low of the day is, I actually did a video yesterday, which surprisingly was one of my worst viewed videos in a long time. And in this video, I took you through 4 amazing trading strategies. And if you had have watched that video, you actually would have caught this breakdown from it. I posted this on Twitter to show the example of one of those strategies, which this one was a single session M formation in Asia, and that led to the breakdown. And many people actually caught this trade. There was a lot of you that thanked me on Twitter and in the private Discord as well. So thank you you for acknowledging that. I really appreciate it. But if you haven't checked it out, be sure to check it out because it goes to show like people who watch this video once were able to make money yesterday. So when we match these levels up now to fib levels, we can see around 50 fib is the low of the day, so the low of yesterday. That might be an area to retrace. It's about 61,400 sort of area. It would also be the halfway mark of the high and the low of the week. So that's going to be a very, very key area if price does have a retracement all the way back there. Not a guarantee we're going to get that high, but if price does retrace there, that is where I would be looking for hints that we're going to head further down or we're going to eventually break the low of the week. If it doesn't look all that weak there, then I'll be looking for bullish confirmation that show me that this leverage wipeout was enough and they don't need any more. So let me explain to you the two ways that I'm going to know that when price has finished this retracement that it's making currently. First of all, I need to assess the open interest. So this indicator down here is the open interest. When we had this drop down here, we had a very sharp drop in the open interest. The sharp drops in open interest show you that that was in fact liquidation. So as I explained at the start of this video, when a drop happens just irrationally in absence of a news event, it's usually liquidity wipeout. This confirms that that is what happened and it came on very high volume as well. And this is where we need to assess if the damage is done or not. Now, there's not enough price action for me to draw a conclusion yet. And that is why in this video, I'm going to tell you what to look out for. And if I happen to see it later on, I usually do my updates on Twitter if I see something that is high probability. So be sure to follow me on Twitter if you're not following me already, and make sure that you get any of my social media links from the description of my videos down here, because there are millions of fake accounts and you likely will choose the wrong one if you don't pick it from here. So if the low of the week is going to hold and the damage is done and we're going to head up from here, what will happen is we will likely build a multi-session W formation. And I'm on the 1 hour time frame for this, but it can also happen on the 15-minute. And what that will mean is that this side is actually starting to be the first side of the W. We need to wait for the Asia session to end before we can know what today's initial high of the day is. At the time that I'm filming this, we're only halfway through Asia. So this line here that is telling you the initial high of the day is not right yet. We have to wait for the end of the session. So let price do whatever it's going to do in Asia and set the initial high of the day. Once that's done, sometime probably in UK or US, price will retrace back. It will make a second attempt at the low, but it won't return to the first low. And around here is where you would be looking for your final trigger, which is bullish candlesticks. If we happen to get that, that is the signal that the damage was done and now price can move up. And that is where you will open a long position. That might not even happen today. It may actually take us into potentially tomorrow. You know, usually trend reversals are triggered by a news event. So if we have a quick look at what news events we've got coming up this week, we do have tomorrow prelim GDP and we also have unemployment claims. They will both be happening around the end of the UK session tomorrow. So it could be that we just consolidate, we start to form this W formation over the rest of today, and there isn't actually going to be a trigger to trade until tomorrow. It's possible. So this is what I would be looking for in order to take a long position. Now, the W formation is the easiest trend reversal to identify. There are other things that can happen. So if you want to learn all of the ways that you can catch a trend reversal, you need to learn this method in full. And if you are interested in learning all of that, there is a link down below to our website where you can read about our memberships that give you access to all of our educational material. Not to mention, as a member, we do 3 live sessions per day on all of the trading days. And we also do Q&A hangouts and regular market updates. There is a lot that is involved in the membership. So if that's something that interests you, be sure to check out the link in the description of this video. But let's talk about the bearish scenario and what I would need to see in order to build the expectation that we're actually going to break the low of the week next. So for a bearish scenario, we would still potentially have a little bit of a retracement. Sometimes price can just consolidate sideways, but a possible bearish scenario will be that price does a little bit of a retracement or consolidation, we would be looking at all of these EMAs. So you start with the 10 EMA always, because that's the one that is closest to price. So if price cannot get above the 10 EMA, that's not a good sign. And so you would then be analyzing the candlesticks around that level. Are there wicks to the top of it? Does it look like we're struggling to push any higher? That is your hint that that's the best we're going to get out of this retracement, and we actually should be prepared for lower prices. And you're following that same rule at every EMA. So if it does cross this 10 EMA, you'd be looking at the 20 EMA next, and then you'd be looking at the 50 and the 200, which they're basically close together right now. And if they even cross over soon, they haven't just yet, that would also be a bearish cross. And that would probably cross close to this low of the day. So this is a very important area. If price can make it back here around the 61,300, you really have to be assessing what's happening there. If the candles are really struggling to get any higher than that, I would start preparing for lower prices. And if you were to open a short position there, maybe the short position will only come back down to the initial low of the day. But at the end of the day, you've got a day trade short. And at this point, you would reassess the price action, because this could turn into the W formation that I just showed you. And if it doesn't look weak here, if it starts to look bearish, that's where you would bag flip. You close your short, you open your long, and now you're bullish. But if it continues to look weak here, you would just stay in your short position. You're not exiting. You would then reassess what happens at the low of the week. Again, if it breaks through that, we're just holding on to short. And that's actually very, very similar to the setup that I showed you here. So let's quickly take a look at that, because this was yesterday on the 15-minute time frame. And this was the exact setup that I covered in this video yesterday. Yesterday, we got the M formation in Asia. So the trigger for this trade was on this second peak here. It was also a rejection of the 50 EMA. And for the purpose of that video, we were talking about taking trades that we would close before the end of UK. So this trade was done and dusted for the purpose of that video of being a 7-to-1 risk to reward. But just as I explained to you about the EMAs for entry, EMAs are also your very clear signal of how strong a trend is. So if you were to hold on to a trade like this, if you are happy to trade into the US session, look here how the price didn't break the 10 EMA. Remember when I said to you, if it doesn't break the 10 EMA, that's extremely bearish. That is what happened here. Here, even there was an attempt to try and get above, couldn't break above the 20. 10 and 20 EMA, if you can't break above them, extremely bearish. 50 EMA we use as retest for continuation of a trend. So 10 and 20 here, extremely bearish. And this was the open of US. So a rejection of the 20 EMA on the open of US is a very good signal to you that the trend is going to continue from UK into US. Now as price moved away, you can see we had this retracement, and this blue one is the 50 EMA. We couldn't do it. So like I said to you, the 50 EMA is the retest EMA. So bearish trend, retest of the 50, trend continuation should be expected. And then from there is where we fell away in the dead gap zone. So when we have a look at what's happening now, we're currently in Asia, so we're just waiting for the consolidation to finish for the initial high and low of the day to be set. There's not much for me to tell you about the current price action. But again, firstly, you'd be looking for a retest of the 50 EMA, and then we would be using the UK or the US session tonight to decide whether or not we're going to get trend continuation or a trend reversal. And remembering today may end up being flat, because when you have such a strong move that freaks out the market, they're hesitant to take action. Most people are hesitant. You do have your degen gamblers, essentially. You do have them that will go in, but for the most part, people will be hands off and not know what to do next, and they just freeze and sit still. And so that is what causes consolidation. But I think at this point in time, you do need to be prepared for anything, because we do know that that big move down did wipe out a lot of leverage, and we're basically at a reset now. So we need to judge a price action for what it is. If you're an aggressive trader, you would be taking your entries off the 15-minute time frame. If you're looking for something a little bit more confirmed, you would probably take your entries off the 1 hour time frame instead. If you are looking for somewhere to trade cryptocurrency, in some parts of the world, it is getting increasingly difficult to find an exchange to simply be able to buy your cryptocurrency on. So check out Bitunix. They are available globally. They are non-KYC, non-VPN, and they offer both spot trading as well as futures trading with hundreds of coins for you to choose from. Using the link link down below, you will get a massive 25% trading fee rebate on all of your futures trades for life. And in addition to that, you can also get yourself up to 5,500 USDT worth of newcomer rewards. After you've created your account using the link in the description of this video, you just go to the Welcome Bonus tab and your rewards will be earned as you complete different tasks. In addition to that trading fee rebate and these newcomer rewards, if you join Bitunix using the link in the description of this video, it will also grant you access to the free part of our Discord where you can trade with other members learning this method and also get access to some of my emergency updates. All you need to do is go to the description of this video and follow the directions to create your account and get your access to the Discord. Now let's take a quick look at ETH, because ETH gave the better signal that this was going to happen than Bitcoin did, and actually put this warning out to the private Discord yesterday. So if you're a member of TTC, you saw this coming before it actually happened. Let me show you that. So this was a chart update that I did yesterday, and when we're having a look at Ethereum, I said ETH does not look as promising. One of these will lead to what the whole market ends up doing, so make sure you're paying attention to these daily. And this was the ETH daily chart, and it was building a much clearer bear flag. So this was at the time where people were waiting for the retest on Bitcoin to turn bullish and open more long positions. But on ETH, we didn't have the same situation. We were building a bear flag underneath this prior support right here. So that really looked bearish to me, and it really was the signal for me to remain cautious and actually not turn bullish yet. And now when we have a look at the live price for ETH, you can see this is it here. So we've broken down through the flag. Having a look at the liquidation heat map on ETH, the highest level of liquidity that we have below price is at around about the $2,000 mark. And there's this other cluster here that's in the whole like $2,300 range. Now I know that a lot of this freaks people out because they're starting to wonder if we're not actually going to get a bull market. What if everyone's wrong? Recession, election, war, all of that sort of stuff. But I remain positive on this personally, and I do think that once we have this final scare, that the bull market will resume. And I think that because of where we are in the cycle, but also we are building so much liquidity above price as the market makers shake out retail, that they're going to come for it eventually. So I don't worry about moves to the downside. I see them as opportunity because of where we are in the cycle. And who knows, maybe that I will get proven wrong on that and I will end up poor. But for now, I choose to remain in this belief. When we look at the recent liquidity on Ethereum, again, you can see that the leverage is building up above price here. That's because a lot of people shorted on the fast move down. There's a little bit here, but it doesn't look like people are as bullish on ETH as they are on Bitcoin. But I think that's pretty much the whole sentiment in the market right now anyway. A lot of people are like, I don't want to hear about altcoins, I'm not interested. I find when I personally talk about altcoins on YouTube, the views drop off and people are more really wanting to know what's happening with Bitcoin. Even when you look at Solana, look what Solana just wiped out, but look how many people have gone short on Solana. This is extreme leverage above the current price for Solana, which means people have shorted Solana. And we do have some people buying the dip on it, but look at how the delta changed from green to a massive red. So people are very, very bearish on Solana. That actually makes me want to take a quick look at the Solana chart. I find it quite interesting when I look at the daily time frame for Solana. It's just chop, really. Like that is a lot of leverage that got wiped out right there, and it didn't really cause a huge move when you think about it. We're still above the 200 EMA, but this whole range here to me it's untradeable because there is no trend. And you can see on the daily time frame now, it's between the 50 EMA and the 200. So price between the 50 EMA and the 200, when those EMAs are sideways, it's essentially a no trade zone. So a trend needs to be decided on Solana before you would get involved in it in any way.